Back to another training video. Welcome. Again, my name is Evan Cabral, educator slash trader for you guys. If you guys ever want to follow me on social media, and if you love Instagram as much as I do, feel free to follow me on my Instagram. You can see I have it posted down here. It's Instagram at Eventure, E-V-A-N, Evan, then T-U-R-E, and with an underscore on Instagram. Reach out on social media. Much appreciated. Now let's get into the training part of today's topic. We're going to pull up and we're going to talk about the 5-minute and the 3-minute chart here. We've already gotten on the topic of accuracy versus frequency, which really comes from your time frames. Different setups can alternate between the two, but if you're going to trade binaries, you're going to have to understand, and have to really understand this concept right here. With the 5-minute and the 3-minute time frame, this is a good pair to really understand and match together for specific setups, and we call them 5-minute setups. So they're the 5-minute setups. We went over a lot of work on the 15-minute time frame to serve it really for its accuracy purpose, and then now we started to do a little comparison on the accuracy and frequency of levels that can come between. The 5-minute's kind of in the middle, right? The 5-minute's very frequent, but it's in the middle. And what we're going to look for is kind of like we did with the 30-minute and the 15-minute in one video, where we looked at how when something's setting up on the 15-minute, it might be setting up, or most possibly be setting up on the 30-minute time frame. What we're going to look at here is the 5-minute and the 3-minute together, how these two work hand in hand to find a really good, accurate, precise setup. And we're just going to stick to our plain old simple overbought versus oversold method. Because remember, going back to all our first videos, the overbought versus oversold method is the foundation to this setup, to the reversal at the end of the day. So what I have here in my top toolbar, you can see I have a AUD/USD chart open here, and I have a second AUD/USD chart open here. The one on the left is the 5-minute. You'll see when I switch back between them, pay attention, because you'll see the number 5 right there. That's the 5-minute time frame. Switch to the right. That's going to be our 3-minute. And we're going to be doing the same study, but this is for you guys that want frequency and accuracy. Because I showed you something that gives you more accuracy, but not as much frequency as some of you may be looking for. So this is what's going to give you that frequent, but still keep things on the accurate side for you in your trading, because that's what we want more than. We want, at the end of the day, doesn't matter what it takes, we want more accuracy in our trading. That's going to help us be more consistent. So again, the 15-minute gives us that frequency day to day. This 5 to 3, multiple day to day, hourly, or we could say bi-hourly basis, every 2 to 4 hours. So let's take a look at this now. Again, another way you guys can study this at the same time. We can just look for 5-minute setups, and that's really the beginning of it, is looking for a 5-minute overbought or oversold. We're going to be trading that, or we're going to be executing more towards what the 3-minute starts to do, though. So let's go take a look at point number 1 here. We're going to go to this part in the chart, and I have the charts marked out already with blue lines. This was literally just the other day that we're looking at right now when the market was open. Part of the day, I tried to get as close to a 24-hour period as I could, but almost did. We're going to go look at that same point where we see a nice reversal happen here. You can see a nice reversal coming up and a drive to the downside. Let's go look at that point on the 3-minute time frame now. So that was around what time? Let me just make sure. Between about 15 on the 18th there. So that was right here. That was right inside of here. You can see now the 3-minute, just as it's supposed to. It's always going to happen like this. 90% of the time, if the 5-minute's overbought, your 3-minute's going to be up there. Sometimes, when I say 90% of the time, that other 10% I missed out was if it doesn't look like the greatest setup, or if it's not what we need to see. It might look irregular than what we look for. So both 5 minute and 3 minute at this point were overbought. Now the falling point was here. You can see the 3 minute going down. Let's zoom in a little. You can see how we're going up nicely. And then a nice reversal goes down for 1, 2, 3. So 3, 6, 9, 12, 15, 20 minutes. Little pullback and continuation. That little pullback in there, that two green candlesticks came from an oversold here. And then we come down and we're oversold again. But this is important. The combo here, this combo, the thing you have to understand about it is that the 5 minute goes down after the 3 minute goes down. So the first one that's going down, the 3 minutes starting to go down, or it's giving us that step closer to knowing when it's going down before the 5 minute does. They're both overbought at the same time, but this was the 5 minute also being overbought. So picture as the 3 minute starts to go down, picture the 5 minute was like something like this. Picture the 5 minute was still kind of hanging up there, and it wasn't quite so going down. We have the ability to see between both time frames which one's starting to go down sooner, or which one at least looks like it's going down sooner. So this combination with both, not just with one, with both at the same time, can really help give you accuracy and a frequent trading style with just the 5 minute and 3 minute. So here we have another point that was overbought on the 5 minute. The real way to capitalize on this, let's go check. This is the real way to have capitalized on this, would have been looking at the 3 minute at the exact same time. Same strategy is going to be happening, but it will be performing at a quicker rate. So we're seeing this exit. Remember, like I've talked about in our first training videos, the enter phase and the exit phase. The enter phase, price is going up during the enter phase. As we start to exit, you get that reversal. So we can generally look at this full chart. A couple more minutes here. Market's going up, push down. This would have been quick, right? That candle happened quick. That was a very quick candle. To open up, it might have been a hard trade to miss on the 5 minute if we were just looking at the 5 minute at the time. The 1 minute could have helped us understand or even see in the time when things were starting to arch down or when that crossover was happening. We were closer here to seeing this going down, right? We're not up here. We see this going down. Whereas the 5 minute time frame might have been up here still. We go back to the 5 minute at that point. By the time the 5 minute went down, the market would have already been making this move or made it, if anything. So the 3 minute might have looked, in this case it looked like it would have gone down. It wasn't going down so much like it was over here. This was close to going down, but you can see how very close we are to that exit point before this drops. So our indicator that's going to help us precision this more is in the DMI stochastic extreme training. You might see, if you haven't seen it yet, a video labeled DMI binary DMI stochastic extreme. That's an indicator that can help us also confirm closer to when these dropping points are coming. But again, 5 minute, 5 minute. We're going to look at these 2 points and see them on the 3 minute. This is what you want to do when you're live trading. When you find these setups, you're going to be switching back and forth between 5 minute, 3 minute time frames, just so you get that speed, right? That speed in the strategy. When it's here, it's going to look like it's going down. It's going to look different than it looks like right now. Right now it's done already. It will look different than this live in action. They actually tend to go up more live, and then you start to see it arching down. Next one would be here. All these ones I'm marking now in the 3 minute. Remember, I keep switching back between 3 minute and 5 minute. 5 minute you can see is more structured, a little bit more clean, not as much messiness. But again, here's where we talk about frequency, right? Like we've talked about in the previous video, accuracy versus frequency. Your frequency might not give you the biggest moves that time. See what happened here? I don't know if you, let me zoom in on that. So yes, we have a frequent amount of trade setups occurring just on this time frame. Pay attention as we go forward to what some of those setups may look like. Like this might have not been the greatest trade setup. It would have taken a good entry because you can see if we entered as the candle was dropping, it might have been a harder trade to clear. It might have been a tight one or very close loss in there because this didn't really have much of a drop. And that's the type of movement you can get on smaller time frames. That's the type of characteristic where I say, on a smaller frame, you're not just always going to get this type of drop right here. It's just one thing to expect and prepare you guys for. That's why I always start analyzing on the higher time frame and work my way down. You're not always going to get a movement that just keeps going. In some setups, you might be trading right here and you deal with something that's just like this, a short-term pullback for 10 to 15 minutes. That's all that's necessary to clear a trade, but at times what can happen is it can drop and then you're entering as it drops and then it pulls back a bit and it drops more, but it doesn't move too much because a lot of the movement, a lot of the down movement has already happened here. And then it wants to drop more, but something like this right here is a perfect example of what I'm explaining. Right, so this is our 5 minute we're still looking at. And again, remember that. Keep that in your notes. You won't always get, like you can see, a difference between this setup because we didn't exit the stage there, right? That's another part of a technique, right? Some traders will buy here if it doesn't exit. That's different, a little bit more advanced, but didn't exit the stage, actually bounced and continued the market. Right? And if you can see what happened there, it formed a high, pretty much like a pullback to create a new higher high here in this little mini trend. This one here actually exit the overbought stage. And that gives us that push down. That gives us more of a farther decline downwards. So any one of these points on the 5 minute I mark, they're going to be there on the 3. Doesn't matter which one. When you're trading, though, you're going to be flipping back and forth. We can do this all the way down to the 1 minute time frame. We can try to find the exact moment, the 3 minutes falling down on the 1 minute off of a 5 minute trade setup. That's getting a little bit more precision and precise. And my recommendation for that would be monitors. I talked about in one video what a good way to set yourself up for binary is. But monitors can help you being able to look at 2 time frames or 3 time frames at once. That is key in binary trading. A lot of our students have taken the investment upon themselves to get themselves a monitor. And I've showed you guys my monitor. $80, 60, 70, $80. You don't need anything crazy. So I call these 5 minute setups, but I like to trade them on the 3 minute. That's the point I want to mainly get across in this video. If you're looking for that accuracy, let's say you can't find something on the 15 minute, then you're going to start looking on the 5 minute. That's all really as far as you need to go to find a setup. If you can't find anything on the 5, of course, you can work to the 3, but you can see just looking at this chart here, it's not so much necessary because this is happening every day. So if we compare, let's see, 1, 2, 3, 4, the first 1, 2, 3, 4 here, you can see on the 5 minute, these were nice reversals. Pay attention to detail. These were nice reversals that lasted a good, some of them 15, 30 minutes, and then others maybe 5, 10, 15, 20 minutes. Some longer than others. But all these points where our 5 minutes are overbought, they're still very, very good reversals. I would say they're shorter. The distance they go is shorter than, let's say, something that's coming off of a 15. There's more pullback involved in this type of market structure. So what I'm going to do now, just quickly go to the 3 minute here. And I have it marked already. So then anywhere we see, all these boxes you saw me mark on the 5 minute and now we're on the 3, they all fit pretty perfectly, pretty quite well with our 3-minute time frame here. 3-minute time frame is going to give us the speed. We're not looking for the solo trade on the 3-minute. We're looking for a combination of the 5-minute, using 3-minute for more of an entry. So that's how the 3-minute can be utilized. And again, at these points on average, right, when I'm trading off of the 5 and 3, I'm taking anywhere from like 10 to 20 minute sells or buys. Right? Because I don't want, if I get in too early, the reason I do anywhere from 10 to 20 is just in case I get in too early, or sometimes you guys may see me do 7-minute trades, is if I get in too early and I lean more to 20 minutes, I can be still a part of that move. All right? Sometimes we can get in early and something like that may happen. It doesn't just shoot right down, or it doesn't just shoot right up like it did here. Right? That would have been a good trade to clear because the market shot up and it kind of stayed up more so. Didn't stay down before it went up. Like this could have been an area. Right? See how the market came up, came down, went up. That would have been something we might have needed to treat longer term. And these points, you can treat them longer term. You can take 20-minute sells, 20-minute buys on these points, 10 to 20-minute buys, and so on. If you really want to get precise with it, you can go from your 3-minute to 1-minute, and that would be when you're trading this. When you're trading this, like, you can find that exact moment where you're looking for it on the 3-minute at the 1-minute peaks. And that's when things start, maybe not exactly go down, because this box right here represented my 3-minute and my 5-minute box. The 1-minute kind of went down and then stayed down, and then the 3-minute followed. So I don't use 1-minute, I stick between 15 and 3. Some of our students have developed, signature strategies of their own experience around the 1-minute time frame. They've taken everything we've shown them and brought it to the 1-minute and applied their own experience there, and even came up with their own methods. We've seen a lot of students even do that just from these types of trainings that we do on our live sessions. Other than that, though, guys, this is a combination you're going to want to study, the 5-minute and 3-minute combination. Again, we use the 5-minute to spot that setup. We're using the 3-minute more for the execution of things. And on up top with this video, we've talked about it on other videos, the DMI, Stochastic Extreme. That is a useful tool that corresponds with this tactic here, this that we went over. So I'm going to run down that indicator in another video, maybe on this chart or another chart, just so we kind of look at the same thing. And that's going to be called our confirmation indicator. So be sure to watch that video if you haven't seen it on the DMI yet. It's going to help with this a little bit more. I'll see you guys there. I hope you guys are enjoying this course so far. Remember, if you want to reach out social media, Instagram, if you're watching this, that is it right there. I will see you guys on the next training. You guys take care.